Hi, everyone. Welcome to the Snowball Wealth Podcast, where we talk about how to get out of debt and start building wealth, especially if you're the first in your family to do so. My name is Tanya Menendez, and on today's podcast, we'll be talking about taxes. And I will be interviewing CEO of TaxxWiz, Tevin Harell. Welcome to the show, Tevin.
Hello. Happy to be here.
Well, you started out as an engineer and started this tax business, which, by the way, for those listening, they provide tax preparation service, bookkeeping, and accounting services for individuals and for companies. So most people actually avoid thinking about their taxes, or they think of taxes as this really anxious time. I don't think I ever hear of people getting excited about doing their taxes. So I'm curious, what prompted you to start a tax business and really get into this?
Yeah, for sure. So, most people hate this thing that they have to do every single year. But kind of with me, I never even done my taxes up until after college, And after college, I actually met my dad for the first time, my biological father. He owned,
Whoa,
yeah,
that's a whole nother story. Yeah.
So that's a whole nother story, right? But and it was pretty interesting because with me being open to meeting him, I found out a lot about myself because I was always entrepreneurial and all those different things. And as a bid to connect, I found out that he owned all of these different tax offices around the Southeast. So I took over one as a side business while still working my engineering job. And then that's kind of where I started learning the tricks of the trade. I was already good with math, and I started seeing all of these discrepancies and inefficiencies. And I was like, hey, this operation kind of sucks. I don't see how you built $1 million business, kind of like this. And that's what got us into it and started working on software that kind of helps people and tax professionals. So that's kind of how I got into it.
Very cool. Very cool. Who would have thought that that's how you, starting out by taking over one of the locations and then now bringing technology into it. And that makes sense. Actually, it's matching your engineering background as well.
Mm-hmm.
Well, I'm curious to hear, what was your money mindset growing up? Like, were there any stories that you remember, maybe the first few stories that you remember about money that really shaped the way that you viewed money overall?
Yeah, for sure. So with me, I grew up not really knowing a lot about finance, not really, knowing about money. I grew up with 8 people in a 2-bedroom house, and the lower parts of Alabama. I think when I went to college and I went to Auburn University, where it's a lot more prominent people, a lot of people with a lot of money and all those different things, was my first time of realizing people had all of these things and they understood like credit cards and my first time paying my bills and all of those different things. And I started to learn the importance really quick, especially going into my first job of, credit is important because I couldn't get an apartment, without my mom coming to sign it. And, this is how savings work. And how do you fill out a W-4? Because at that point, I've never done taxes. So I think at that point, I got like insanely interested in all of these concepts. But most of my life growing up, it's paycheck to paycheck. And those are the kind of things that I've seen. And that's when I kind of was like, hey, I don't never want to, live or be like that.
Mm-hmm. And, now, my, one of my team members was able to do a bit of research and she saw that you were married. So, what have your finances changed since this new milestone?
Yeah, so we kind of had those discussions kind of pretty early on. We were like, hey, we want to have a joint account, but we do want to have some forms of our own kind of personal money. And we kind of, agreed upon it and, maneuver like that. I think one of the biggest things was, not keeping secrets about the money, right? Being transparent, like, hey, if you want your own, then that's fine. If, we want to keep separate. But I think some of the things, and even what we're doing is like people's joint tax returns. And, we're kind of getting their story and hearing the things about, and we're kind of giving them the advice of, hey, just be transparent, be open. What debts do you have? Because all of these things used to come to light with its tax return time. So whatever works for you, but be transparent about it.
I think that's such great advice. And I think that even for some of our community members, there have been people that definitely have mentioned that, sometimes there that can be one of the causes of relationship distress. So
Yeah.
definitely making sure that you're open and transparent makes a lot of sense.
Yeah.
And so I'm curious to get a little bit more into taxes, because I know that for
Okay.
those listening, I think that there were some community members that submitted some questions to us. And one of the questions was, they hear a lot about some of the largest corporations and like some of the richest individuals paying zero in taxes or paying very little taxes. And then, when they look at their check, they're paying like 30% or more on taxes, or more than 20% on taxes. So, can you share a little bit about your insights on how you've seen, maybe people from different income brackets and how they view their taxes, and maybe some strategies that you could give some of the listeners out there, and ways that they can think about it?
Yeah, for sure. So, the first thing to know is that the tax code was created for the wealthy, especially with tax reform. So the tax code that we're living right now was the latest of when Trump was in office in 2018. So these are still those rules that we're going by. Not much has changed since tax reform. So the reason that the ultra wealthy is able to, get refunds. Actually, Amazon got a $300 million refund 1 year, and this is a $1 trillion company, right? It's because they understand that write-offs, right? So one of the biggest things that you can do as an individual is, if you do work a W-2, well, having something that you do on the side, whether it's, being a creative, or whether it's being podcasting or a side job or something like that, that you actually enjoy. Because once you have that, now you really open the door and being able to leverage the tax code, right? Because that's how they're able to deduct claims, because they have to get to their place, the places that they have to go faster, right? That's how they're able to deduct 100% on food, and all of these different things, classifying it as a business meal. So, but when you're a W-2 employee, especially with the current code, there's no real things that you can deduct or write off, especially since a lot of the COVID things has kind of ended.
Yeah, and I think, well, one thing I wanted to mention before this is that this should not be considered financial or tax advice. Please,
Yeah,
please make sure to talk with your own
exactly.
tax professional, because so I wanted to make sure that we wanted to share that disclaimer. But yes, I think that, I've definitely seen, even in working with my accountant, like what credits are available to businesses, what different types of expenses that are available to, or like things to expense as
Mhm.
well. But for the average like W-2 person that has a W-2, what can they do in thinking about how to optimize taxes, or even if it's, ways to stay organized? Like, any advice that you have during tax season?
Yeah, for sure. So, little things that you can do is, if you had a lot of extra income, you can max out your, retirement savings and all those different things. So, that is a tax deduction going into the upcoming year. Things to know, you are going to get a higher standard deduction. Um, if you're close to itemizing, so let's say that you just bought a house, for example. So if you just bought a house, you're going to get a form that you're able to put on your tax return. And, depending on that amount, you may also be able to give to charity, deduct like medical, dental, vision, expenses that's not paid by the insurance, and a couple of different things like that, that'll allow you to get a bigger refund if you are eligible to itemize. But one thing to note this upcoming year that everybody should know that is not talked about enough is, especially for my parents, you're going to hurt the most this upcoming season, right? Um, for the first time ever last year, we saw a lot of credits for parents, right? We saw a lot of credits. We saw daycare credits um, of up to $8,000. We saw, child tax credits for up to $3,600. That 3,600 has went down to 1,500. That 8,000 has went away, right?
Mm.
So you've already lost almost $10,000 in credits. The COVID credits that entrepreneurs and especially parent entrepreneurs for taking care of your kid is going away, and that was up to $64,000 in credits. Um, so you will see a drastic decrease in returns if you are a parent who was getting the child tax payments and was sending your child to daycare. So that's one thing to kind of know and plan accordingly this upcoming season.
Yeah, and so just to recap, you mentioned, contributing to a retirement account helps reduce your tax liability.
Mhm.
Also, for parents in this upcoming year, there's going to be some changes around some of the tax credits, especially for people that have dependents. Are there any mistakes, like common mistakes that people do when filing their taxes? And I'd love to hear maybe a few of those stories for for those listening to.
Yeah, for sure. So, especially for my do-it-yourselfers, um, if you are doing your taxes yourself, please make sure the number one reason of audit is actually miskeying information. So, just going too fast and, you're looking at the
Oh,
W-2.
interesting.
Yeah, yeah. You looking
Interesting.
at the W-2 and you make a mistake and put 10,000 instead of 1,000. And that's a totally different refund, that you end up getting back. And the IRS ends up sending you a letter, getting audited or whatever the case is. So it's just really being careful with the information that you're typing in, just double checking before you submit and all those different things. Um, so, it's a funny story about somebody made a mistake and got $1 million refund. I think they only made like $25,000 a year. And they had to go to court and
Oh.
everything because they got the refund in their account. And the IRS says, no, hey, that was a mistake. You got to give it back. And, they was like, well, you gave it to me. So like this is real news where they had to go back and forth on, legally should they have to give it back. They end up having to give it back. But, those things happen. And you can imagine they might get audited every year from now just because.
Yeah.
But
That would be such a weird experience getting $1 million and then
yeah,
having to do that back, right?
yeah, yep. Miskeying
But
information. And then another one is to make sure that you give your accountant, or if you're doing your own return, everything you have. The IRS has even suggested this upcoming year to kind of wait, just to make sure that you did it. That you have every single form based off of the things that you did throughout the year. So sometimes people, like you may have invested a little bit in Robinhood, and you're not really thinking about this from a tax consequence perspective.
mhm.
And then you go and file your taxes, and then Robinhood are notorious for, Robinhood, TD Ameritrade, most of these stockbrokers are notorious for not sending their forms until the end of February. So you've
Mm.
already filed, and now you get letters for missing that information, especially with this Cash App and Venmo thing. Have you heard about it?
No, I haven't. Please
So
share the tax news with us.
so yeah, like is it a big deal about if you're getting money from Cash App and Venmo that if it's over $600 throughout the year that you're now going to get a 1099K because now all of this money is taxable, right? And it's been kind of an
Mm.
uproar and they've been going back and forth about it, but one thing to note is they did make sure that it won't be on personal accounts, right? So it's only if you have a business account set up with Cash App or Venmo or whatever the case is. Because this is brand new, the IRS is suggesting that, hey, maybe wait until you get this form, your
Mhm.
1099K. Wait until you get, your mortgage form or whatever the case is to file. Just just kind of hold off as long as you can to make sure that you got every single possible taxable thing throughout the year before you make a mistake and get an unnecessary audit.
Yeah. And so what happens when you do make a mistake on your taxes? Can you talk us through some of your options? Like say that you received a refund that was maybe too large and
Mm-hmm.
they overpaid you 5 grand, for example. What are your options if months later you've already spent that money? And like how do you have that conversation with the IRS?
Yeah, that happens all the time. Right. That happens literally all the time. So usually when the IRS sends you a letter, they already know the mistake or, they know that they're usually right. So if it was a pure mistake, then they'll send you, hey, this was the thing that we corrected on your behalf. If you think that this is correct, then you can pay through and they have the payment options. And through those payment options, you also can set up a payment plan. So let's say like if it was 4,000 over, and you had already spent the money shopping or whatever the case was, then you now can do a payment plan on that 4,000. Some people even just wait until the next season if they know they're getting a refund and have the
Hmm.
IRS take it out of that refund. But you will,
Hmm.
accrue interest or whatever. But if you receive a letter and they corrected the return and it's like, hey, I didn't make a mistake that big because they do that as well. They'll um, prepare the return for you. Then that's when you need to go talk to a tax professional, tax lawyer, accountant, and we usually able to pretty easily look at a letter and say, oh, okay, I see what a mistake was, but these are things that you can do to offset it, especially as a business owner. Like I said, the world is open with possibilities as a business owner. So yeah, we made that mistake, but we can do this and this, what's called an amendment, um, where you fix things, or whether it's to get more money or to fix a mistake, and we can amend the tax return, and that way you may not have to pay. Or sometimes if you did it yourself, and what we ran into, people do it themselves, and then we go amend the return, and then we also fix that mistake and got them more money on things that they just didn't know about or missed.
Oh, amazing, amazing. And then it ends up being sometimes even better. That's awesome.
Mm-hmm.
And I think that sometimes what some people struggle with is getting organized. Speaking to your point on, making sure that you don't miss a document. Like, what have you seen that have been the most effective methods of getting organized for tax season?
Yeah, so you can look up tax organizers or prep lists, right? Because
Yeah.
a lot of the time when people miss things, it's just because they didn't think about it. Like you forgot that you made that one investment, and bought some Apple, lost all your money. You forgot that you did that, right? So you can go through a checklist beforehand, just mark off, oh, did I do this? W-2. So we actually have a front end app that asks every single question possible. Because we saw that was kind of the number one mistake. So we're like, well, hey, let's just ask every question. That way, once you say yes, it's going to tell you this is the form that you need and
Mhm.
this is how you get it, right? So a lot of people, for example, for my people in school or for my parents with kids in school, a lot of people don't know about what's called the 1098T, right? The 1098T can get you an extra $1,000 or more on your refund by just going to college. But a lot of people don't know about that. So we asked that question, and therefore, now it says, hey, you go to your school website, you go into tax and finance, and now you can pull this form that's going to get you more money on your return. So you can do that through prep lists if you are a W-2 employee. But if you are, a new business owner, a new entrepreneur, and especially for all of my people who picked up a side gig or as a contractor, so Uber, Lyft, DoorDash, doing things that's going to get you a 1099, it might be worth the investment into something like QuickBooks or Wave
Mhm.
Apps, which is free. So that's another accounting platform that you can use. It just keep up with transactions, connect your bank account, so you don't even have to manually input all of these things. Take pictures of receipts. But those are two ways that you can get organized and make sure that you have every single thing before actually filing, the tax return.
Got it. Got it. And I think speaking about new business owners, a common question that we get is when should I set up an S Corp, an LLC, or a C Corp if I'm starting a business? Or can I continue to, get revenue into my business under my social? So I'm really curious to hear what your response is, and what your advice is to young entrepreneurs.
Yes, yes. So I see a lot of kind of misinformation about this. So the easy way to think about it is um, as you're making income, right? An LLC with just you as a single member will be on your personal tax return, which is pretty good because you get to, use those write-offs, the home office deduction, how you're in your office space, right? You're able to use all of these write-offs against your income as a new entrepreneur. It's really once you start making net profit, right? So not necessarily the gross. Once you start having a lot of cash left over from the business, so you made $100,000 as a business and you kept 50,000, then now instead of paying $50,000, paying self-employment tax on $50,000, it'll be more beneficial to switch to an S corp. So our threshold is usually once you're at $50,000 of net profit, so money after all expenses, then you want to consider being an S corp because now you have to legally pay yourself as a W-2, and it's a couple of benefits with that, and then you'll only be taxed self-employment tax on the remainder of that income. So it's way better than paying the full self-employment tax on $50,000 worth of untaxed income.
Got it. Got it. So the threshold is typically 50,000 in profit or
Yes,
more,
yes.
for the business.
If you want
Great.
to
And what
switch,
about for a C Corp,
yeah,
which I
for
know
C,
is more costly, than an
yes.
S Corp?
Yeah, for sure. So C corp is usually around the actual structure of the business. So once you decide, because with a C corp you face what's called double taxation, right? So you're going to be taxed at the company and business level, and you're going to be taxed on all income on the personal level, dividends you receive, and so on and so
Mhm.
forth. So from a tax perspective, it's usually not the best thing. It's way more from a structural perspective. So if you have goals of raising venture capital, raising
Mhm.
private equity, knowing that you're going to bring shareholders or like real estate, and you're going to bring a lot of people in, it's way more of the structural advantages and things that protect you from legally. Is when the C corporation really kind of comes into play as a tax benefit, right? But for the
Mhm.
most part, especially while you're small,
Mhm.
LLCs, and then as you get a little bigger, the S corps will probably have a lot more of the actual tax benefits.
Got it. Got it. And would a shop like yours help with, someone that's just getting started with entrepreneurship, getting set up with the right entity, whether that be an LLC or an S Corp?
Yeah, for sure. So we have lawyers who we kind of partner with that kind of help you walk through that process if you're just beginning. But during the tax season, one of the biggest things that we'll focus on is we see, hey, you had a lot of income. You could have spent a little more money on these things. Your self-employed IRA, you could have put a little more money in there, and that could have been deductible, so that would have been untaxed income. So we start looking at strategies and say, hey, you really need to be thinking about switching to an S corp. And usually we had a conversation and, kind of get the CPAs involved to go ahead and start working on, kind of that process. But once we're doing a return, we're already thinking about all of the things for tax
Mhm.
planning. And that's one of the biggest benefits, even if you're just a brand new entrepreneur, of actually having a professional, actually having an accountant,
Yeah.
having people help you with your return, instead of, doing it yourself as long as possible. And I'm sure you probably see these benefits, with your accounting.
Yeah, yeah. I mean, I've been working with my accountant for like, gosh, like 10 years now,
Oh wow.
which is wild. Yeah.
Yeah.
um since like my very first business. So yeah, but it's been a big relief not having to do that on my own. Just
Hmm.
being able to ask him different questions throughout the year.
Yep.
Um Well, I know we're right at time, so would love to share how our users can find you and maybe the best ways to work with you.
Yeah, for sure. So you can find us at our website. It's TaxxWiz.com, TaxxWiz.com. We're also on LinkedIn. We're very active on Instagram. So Instagram.com/TaxxWiz. Everything is labeled under TaxxWiz. Um, we have CPA services, bookkeeping services, like I said, business formation services, a lot of different things to kind of help, guide you through this world of taxes that we all love and hate, you know.
So great to share some of your insights with our listeners. And thank you for everyone listening. If you're interested in getting started on building wealth in general and learning more about different wealth building strategies, you can download our app at Snowball Wealth. In the App Store or online on snowballwealth.com. And tune in. We post generally every Sundays. Sometimes we'll skip a Sunday or two, but we check for us on Spotify. All right. Thank you, everyone. And I'll see you around the app, Tevin.
All right. Thank you.
Take care.
Thank you, everyone.